joining us. Jim Bianco, president of Bianco Research. It's an all-star lineup today. Very exciting. Jim, let me start with you here. Margaret points out we're not really moving at all in today's session. Other people are pointing out how low the volume is. Teddy Weisberg said there's just not that much excitement out there, and clearly there's not a lot of selling going on either. What's happening in this market? What are we waiting for? What has to happen to get things moving in one direction or the other?
I think it's basically about the economy, and it's about the outlook for profits at this point. Whether or not we get some data that suggests that, things are on the rebound or suggests that things are turning south. But in the meantime, we're moving sideways. And I might add, being that it's Monday, if you look back in the last year as the market's gone up, and we did a study on this, 30% of all the gains have come on Mondays. Mondays have been far and away the best day of the week to own stocks in the market, and right now it's been kind of a nothing day, which is somewhat unusual for a Monday.
So, Jim, does that mean tomorrow's turnaround Tuesday?
Well, if it was a big day, you could make that case, and that all the big Monday gains, you tend to have a bit of a struggle on Tuesday, like we did last week. But being that we didn't do much today, unless we do something spectacular in the next 7 minutes, it probably portends a bunch of nothing for tomorrow.
Jim, what do you think about this economy? Is the recovery self-sustaining? Can we get back on our feet and keep going? I mean, that seems like what you're saying the market is waiting for. We want to see this. I think Teddy Weisberg says a show me market here.
Oh, absolutely. I think that if you look at the statistics, the economy is recovering. The recession probably ended last summer, June, July, August. We went from 700,000 payroll jobs to zero. But here's the rub. We've got $800+ billion of stimulus. We've got the Fed buying $1 trillion worth of mortgages. We've got a first-time homebuyer tax credit, which I think has been very, very supportive of the market. So how much of the economy's recovery is artificial? How much of it is because governments are throwing money at it to prevent it from going down? And how much of it is truly a recovering economy? In the next couple of weeks, the Fed's going to stop buying mortgages. April 30th, unless it's extended, the first-time homebuyer's tax credit ends as well, too. We're going to then find out how well housing is doing without government support. And if it wobbles, it then says that the economy's really not as well as we think it is. It's just a bunch of government supports, and I don't think that'll be taken well by the market. So that's the question.
Jim, hasn't the market already priced in those very well telegraphed, well-known dates like the expiration of the MBS buybacks, like you just mentioned, at the end of March?
It depends on who you talk to. I've talked to a number of mortgage traders that don't believe it. They think that the Fed will stop April 1st, then some point in April, the mortgage market will get a little wobbly, and then the Fed will be forced to come back in at some point, or maybe it's May or June. The Fed will come back in and start purchasing again. If that is a widespread held belief, then we haven't priced in the end. But if a lot of people do believe that's it, it's fini, it's over, then I do think it's been priced in and it might be more of a non-event.
Hey, Jim, let me take you forward then a little bit. I mean, if you're bearish on this market and the economy, you got to love to talk about housing. The data we've had has been pretty weak lately. March 31st, the Fed stops buying mortgages. April 30th, the first-time homebuyer credit drops out. What does that do to this housing market? I mean, are we looking at just continued quagmire here, if I can use that word at all? In this sense?
Yeah, you could use that word. It really depends on, first of all, it depends on whether or not the first-time homebuyer tax credit does expire April 30th. Congress can always extend it. They did once before. We'll have to see whether they do it again. We broke down the housing numbers from Case-Shiller, and what you'll find is Case-Shiller does break them down by price, low-tier house prices, middle-tier, and high-tier. And the low-tier house prices have been screaming higher in the last several months, largely because first-time homebuyers have been using the tax credit as a form of down payment to buy a lot of those houses. When you get to the upper tier, it's not been doing as much. If that's what's driving the house price market, is this government subsidy that they're basically giving everybody $8,000 for a down payment, if you want to think of it that way, and that ends, and the first-time homebuyer in the lower tier of the housing market suffers, then the whole index will turn lower, and it will be viewed, I think, very negatively because house prices have had the biggest fall that they've ever had in the recorded history of Case-Shiller, and then they will have proceeded to do nothing but stop going down. There won't be any kind of a rebound then at that point, and any rebound we had was purely artificial based on government subsidy.
Hey, Jim, it's Adam. Sounds to me like you're actually making a pretty good case to get short the XHB. That's the home builder ETF. Up 10% year to date. Is this thing just gotten ahead of itself and ahead of the fundamentals?
I've always been worried about the home builders as well. So remember, home builders have another problem. They are new construction. When you build a new house, you have a cost. You can't sell it for any price. If you're selling an existing home, you might have bought it 15 or 20 years ago. You might be willing to sell it at whatever the prevailing market price is. If home prices dive, a lot of these new constructions, they won't sell them at a loss, or they'll be very reluctant to, where existing homes will move. I think the home market has a problem. That's why you see guys like Erev Hovanian and Bob Toll spending almost as much time in Washington lobbying for government subsidies as they do running their businesses. They know that that's what's really going to drive their businesses as they move forward, whether or not the government stays involved in their industry.
All right.
Jim, I want to ask you, I mean, we've been talking so much about government gridlock, really, policies not changing, nothing getting through. When you look at what's on the docket in terms of the potential for financial regulatory reform, how does that factor into your worldview right now? Are you factoring it out?
No, it's been tough to factor in financial reform because it's been all over the place. You know, there was a set of regulations that they proposed, then they summarily died, then there was the Volcker rule, then Wall Street thought that that wouldn't happen. So it's been very difficult for people to try and price that in because there's no consistency. You know, next week we might have a different set of rules. Now we're talking about whether or not the Fed would be in there. It is a wild card, and it could definitely impact markets, but I think the market just doesn't know what to make of it right now.
Andrew?